Hello everyone. Today we are going to discuss the weekly current affairs on Indian economy and we will be covering the topics from 5th April to 11th April. Right? So we are going to discuss today the Purchasing Managers Index PMI, pre-tax insolvency resolution option for MSMEs, RBI extend fresh support of 50,000 crore to NABARD, payment banks, International Monetary and Finance Committee IMF C. Right? So let's start the first topic, that is Purchasing Managers Index. Why it was in the news? India's Purchasing Managers Index for sector fell to 54.6 in March from 55.3 in February. Right? It was in February. It was 55.3 in February and it fell to 54.6 in March. Right? So what is Purchasing Manager Index? It is an indicator of business activity both in manufacturing and service sector, right? We can also say it is an index of prevailing direction of economic trends in the manufacturing and service sector. It summarizes whether market conditions as viewed by purchasing managers are expanding, staying the same or contracting. The purpose of PMI is to provide information about current and future business condition to company decision makers, analysts and investors, right? It is a survey based measure that asks the respondents about changes in their perception of some key business variables from the month before, right? It is calculated separately for the manufacturing and service sector and then composite index is constructed, right? It is derived from series of qualitative questions. What are the questions? Executive from reasonably big sample running into hundreds of firms are asked whether key indicators such as output, new orders, business expectations, employment were stronger than the month before are asked to rate them, right? It is a number. PMI is a number from 0 to 100. A figure above 50 denotes expansion in business activity. Anything below 50 denotes contraction. Higher the difference from this midpoint, the greater the expansion or contraction, right? Rate of expansion can also be judged by comparing the PMI with that of previous month data. If the figure is higher than the previous months, then the economy is expanding at a faster rate. If it is slower than the previous month, then it is growing at a lower rate, right? So this was all about the PMI. Our next topic is pre-tax insolvency resolution option for MSMEs, right? Why it was in the news? It was in the news as central government promulgated an ordinance allowing the use of pre-tax as an insolvency resolution mechanism for micro, small and medium enterprises. In short, we call them MSMEs, with defaults up to 1 crore under the Insolvency Bankruptcy Code. The move comes soon after the end of 1 year suspension of insolvency initiation imposed by the government in light of COVID-19 pandemic, right? Government had last year also increased the minimum default threshold for insolvency proceeding from 1 lakh to 1 crore, right? Why it was introduced, or rationale behind the introduction of pre-tax. Pre-tax are largely aimed at providing MSMEs with an opportunity to restructure their liabilities and start with a clean slate while still providing adequate protections so that the system is not misused by the firms to avoid making payments to creditors, right? It will help corporate debtors to enter into consensual restructuring with lenders, address the entire liability side of the company, right? Government should consider setting up of specific benches of NCLT to deal with the pre-pack resolution plan to ensure that they are implemented in a time-bound manner, right? So what are the pre-packs? The main question is that what are pre-packs? It is a resolution of debt of distressed company. How it is done? Through an agreement between secured creditors and investors instead of public bidding process, right? This system of insolvency proceedings has become popular mechanism for insolvency resolution where UK and Europe over a past decade, right? So how it is done? Under pre-pack system, financial creditors will agree to terms with a potential investor and seek approval of the resolution plan from National Company Law Tribunal, right? Approval of minimum 66% financial creditors that are unrelated to corporate debtors would be required before resolution is submitted to National Company Law Tribunal. Further, NCLTs are also required to either accept or reject any application for pre-pack insolvency proceedings before considering a petition before SERP, right? We will discuss the SERP later. It is expected to be rolled out to all corporations over a time as legal issues around the provisions are settled through case law, right? Benefits क्या है इसके? What are the benefits over corporate insolvency resolution process, right? SERP. We will discuss SERP later part. Okay. One of the key criticism क्या है SERP का? ये एक time taken, it is a time taken for resolution. It takes time to resolution. Like for example, at the end of the December, over 86% of the 1717 ongoing insolvency resolution proceedings had crossed 270-day threshold. Right? What was the reason behind it? They are prolonged litigations, right? By erstwhile promoters and potential bidders, right? And if we talk about the pre-packs, it is limited to maximum 120 days with only 90 days available to the stakeholders to bring the resolution plan to NCLTs. Like, and another key difference between pre-pack and SERP is that existing management retains control in case of pre-packs, while resolution professional takes control of the debtor as a representative of financial creditors in case of SERP, right? Experts note that this allows for minimal disruption of operations relative to SERP, right? If we talk about the more benefits, it provides protection to creditors. Pre-pack provisions introduced by the central government also provided for adequate protection to ensure that provisions were not misused by errant promoters, right? Pre-pack also allows for Swiss challenge for any resolution plans which proved less than full recovery of dues for operational creditors. Under what is Swiss challenge? Under Swiss challenge क्या होता है? Any third party would be permitted to submit a resolution plan for distressed company, and original applicant would have to either match the improved resolution plan or forego the investment. Creditors are also permitted to seek resolution plan from any third party if they are not satisfied with the resolution plan put forth by the promoter, right? If we talk about what is insolvency bankruptcy code, right? It was implemented through an act of parliament. It is a bankruptcy law of India which seeks to consolidate the existing framework by creating a single law for insolvency and bankruptcy. It will be able to protect the interest of small investors. What is the significance? If we talk about the significance, it will be able to protect the interest of small investors and make the process doing the business less cumbersome process, right? Why it was introduced or why it was necessitated? Due to huge pile up of non-performing loans of banks and delay in debt resolution, right? Companies have to complete the entire insolvency exercise within 180 days under IBC, and deadline may be extended if the creditors don't raise objection to the extension, right? Insolvency Bankruptcy Board of India has been appointed as a regulator. It can oversee these proceedings. And if we talk about the composition of Insolvency Bankruptcy Board of India, it has 10 members from Ministry of Finance, Ministry of Law, Justice, Reserve Bank of India, right? What are the aims and objectives? If we talk about the aims and objectives, it applies to companies, partnerships and individuals and it provides time-bound process to resolve insolvency, right? It provides time-bound process to resolve insolvency. Like when default in repayment occurs, creditors gain control over the debtor's assets and must make decision to resolve insolvency. Under IBC, debtors and creditors both can start recovery proceedings against each other, right? Under IBC, debtor and creditor both can start recovery proceedings against each other, right? And if we talk about the next part of the same topic, that is corporate insolvency resolution process, that is SERP. It may include necessary steps to revive the company, such as raising fresh funds for operations, looking for new buyer to sell the company as going concern. The outstanding debts may be classified by way of another person submitting a resolution plan to take over the company and pay off the remaining debts. In the event a resolution plan is not submitted or not approved by the committee of creditors, the sub process is deemed to have failed. In such situation, liquidation proceeds. Next topic is RBI extends fresh support of 50,000 crore to NABARD. RBI has recently announced that it would extend fresh support of 50,000 crore to the All India financial institutions for new lending in financial year 2022, right? It is aimed to mitigate the impact of pandemic, right? Why it was announced? To mitigate the impact of the pandemic and aid economic revival. Because, right? If we talk about the key highlights of the announcement, in this, NABARD will be provided a special liquidity facility of 25,000 crore for 1 year. Why? To support agriculture and allied activities, the rural non-farm sector, non-banking financial companies, microfinance institutions, right? An SLF of 10,000 crore will be extended to national housing banks for 1 year to support the housing sector, right? More, if we talk about the key highlights of the announcement, like SIDB will be provided 50,000 crore under this facility for up to 1 year for funding of micro, small and medium enterprises. All three facilities will be available at a prevailing policy repo rate, right? If we talk about the NABARD, ये एक एपेक्स रेगुलेटरी एजेंसी है किसके लिए? रीजनल रूरल बैंक्स के लिए, राइट? And cooperative banks under the jurisdiction of Ministry of Finance, right? It was established in 1982 on the recommendation of B. Sivaraman Committee to implement National Bank for Agriculture Rural Development Act 1981. It replaced Agriculture Credit Department and Rural Planning and Credit Cell of Reserve Bank of India, Agriculture Refinance and Development Corporation, ARDC, right? Initial corpus of NABARD was 100 crore, right? Initial corpus of NABARD was 100 crore. What is the aims and objectives? What are the aims and objectives of NABARD, right? It aims to promote agriculture, rural development. How? कैसे? Participative financial, non-financial interventions, innovations, technology, institutional development for securing prosperity, right? Function क्या है इसके? What are the functions? Refinance support for building rural infrastructure. It prepares district level credit plans and motivate the banking industry in achieving these targets, right? It supervises cooperative banks, regional rural banks and helps them to develop sound banking practices and integrate them to CBS core banking solution platform, right? It provides training to handicraft artisans and helps them in developing a market platform for selling these articles, right? So our next topic is payment banks. Recently, Reserve Bank of India has increased the maximum balance limit for payment banks to 2 lakh from 1 lakh earlier. It was earlier 1 lakh, now it has been increased to 2 lakh, right? If we talk about the payment banks, so let's look at the background of payment banks. In September, background is mentioned here. Here it is, right? In September 2013, Reserve Bank of India constituted a committee headed by Dr. Nachiket Moore to study comprehensive financial services for small business and low income households. Objective क्या था कमेटी का? To propose measures for achieving financial inclusion and increase access to financial services, right? And one point is there, right? committee submitted committee committee submitted its report in January 2014. One of the key suggestions of the committee was to introduce specialized bank or payment banks to cater to the lower income groups, small businesses, so that by January 1, 2016, each Indian resident can have a global bank account, right? In August 2015, one point is there. Here it is, right? Extent guidelines for licensing payments issued on November 2017 allows payment banks to hold maximum balance of 1 lakh per individual. And why it was increased, right? This will further encourage, like it has been increased, right? This will further encourage their efforts for financial inclusion and expand their ability to cater the needs of their customers, including MSMEs and traders, right? It is interlinked. And we were talking about the background, right? Here it is. In August 2015, RBI had given in principle approval to 11 entities to start payment banks, right? And Airtel Payment Bank was the first one to launch payment banks in the country, right? India Post Payment Bank had started operations at 2 pilot branches in January 2017. Some other popular payment banks are Paytm Payment Bank, Fino Payment Banks, right? So this was the background of the payment banks. So next point comes, what are the payment banks? Why we were discussing them, right? Payment banks is similar like banks, but they are operating on a smaller scale without involving any credit risk. It doesn't involve any credit risk. They can operate both current as well as savings accounts, and they can provide other services like ATM cards, fund transfers, bill payments, recharges, net banking, among others, to the account holder. How they are different from traditional banks? They can't advance loans or issue credit cards. The most important, what differentiate them from traditional banks, that is, they can't advance loans or issue credit cards, and can't accept deposits from non-resident Indians, right? One more feature, if we talk about the deployment of it, they are not authorized to get involved in lending activities. It is mandatory for payment bank to maintain cash reserve ratio with the Reserve Bank of India. Payment bank has to invest at least 75% of its demand deposit balance in government security or treasury bill, right? What are the objectives of setting up payment banks? It to provide financial inclusion to the following sections. Which sections? Low income households, migrant labor force, small business, unorganized sectors, right? Background we have already discussed. Benefits की बात करें हम अगर, तो it helps in financial inclusion. They provide people with savings account which can be opened by them easily, and it has tie-ups with commercial banks which provide ATMs, thus making money transfer easy and smooth for poor people, as maintaining a saving account used to cost a lot if minimum balance is not attained. They provide higher rates of interest. They provide higher rate of interest than other commercial banks. They are alternative of traditional banks. Rural areas have always been neglected, as we all know. Thus, the people of rural areas face a lot of problems, right? Village people need to travel to cities to get their money transaction done. This is because traditional banks don't open branches in small villages, right? Small finance banks. The term came small finance bank. What is it? It will primarily undertake basic banking activities of acceptance of deposits and lending to unserved and underserved sections, including small business units, small marginal farmers, small industries, unorganized sector entities. Function क्या है इनके? They can lend 75% of their total adjusted net bank credit to the priority sector. More functions, they can distribute mutual funds, insurance products, other simple third-party financial products. They can't lend to big corporates or groups. They can't open branches with prior RBI approval for the first 5 years. Capital requirement क्या है इनकी? Minimum paid up capital जो होगी for small finance banks shall be 100 crore, right? And promoters must contribute a minimum 40% equity capital should brought down to 30% in years. These are some difference between payment banks and small banks. You can go through it. Is factual, like who can promote, what they must do, what they can do, what they can't do, right? So our next and last topic is International Monetary and Finance Committee, IMFC. It is a body under IMF, International Monetary Fund. It is an advisory body without decision making powers, but helps in providing strategic direction to IMF. It advises reports to IMF Board of Governors on the supervision and management of the international monetary and financial system, including on responses to unfolding events that may disrupt the system. It also considers proposals by executive board to amend articles of agreement and advises on any other matters that may be referred to it by the board of governors. IMFC meets twice in a year during spring annual meetings. So thank you so much. Thank you so much. All the best.